dive in to a great month and a great start to a brand new year. I'd say I'd have to clap it up, guys. Great work there. We only were able to win 56% of our trades, so pretty much half of our trades, but we were still able to profit $6,137. Definitely deserve a round of applause for that one because we did that with only 16 trades, guys. It was a very, very slow month, patient month. Remember, we talked about pumping the brakes? This was one of those months that we definitely pumped the brakes, and it definitely worked out for us. I'd say at the end of the month, we swung a little more than we should have. You know, we could have held on to pumping the brakes. We lost 4 straight losses in a row, but losses are part of the game, and you never know when you're going to have your losses, guys. That's why it's important to grab those bags when you have it, because usually if you do run into 60% of wins, you never know when that win streak's going to happen, when that lose streak's going to happen. So it's just important to stay consistent and steady-minded. Our biggest win, though, was really what catapulted this month and really was why we had a $6,000 month, and that was with Blue Apron. And we really attacked Blue Apron. We played it twice. It was one that we were eyeing down to start the new year, and then we really, really went at it when it worked out. So as you can see, we tried it first and only made $278 on a first green day. It pulled back, and then we set alerts. We were ready for that spot that we couldn't break when we made 278 and unfortunately couldn't break 88 cents. We had alerts set up, and that's why it's so important to set alerts up. And then once it broke 88 cents, we really took advantage of it and made 4,500 and just about 40% in the same day. So it was awesome. We made it in almost 50 minutes pretty much. We were able to profit that. Our biggest loss was that Mullen stock that we just talked about. So that loss we just talked about was our biggest loss. So we were very, very disciplined to start this brand new month. Our monthly stats broken up into patterns. We always love first green days. It tends to be our go-to pattern. It's always our most pattern of every month. So if you aren't familiar with them, it's good to study about first green days. Overnight first green days work, guys. They work really well for us, and we're starting to size up, and maybe one day a lot of other people are going to realize that they really do work out once we start to show our wins are bigger and bigger are bigger. So once we start sizing up more and more, I think we're going to get more recognized on these overnight first green day plays. But they do work out. They're always above 50% almost every single month now. We went 7 for 12 this month, 58%, but still over 50%. Our multi-month breakouts above 50%, 2 for 3. So a couple multi-month breakouts in January. I'd say we're probably going to get more of those as we start to get a market bounce in this new year. We did also play one first red day short, and that's the option right here, and it didn't work out for us. So we're 0 for 1, 0%. But all that together was 9 for 16, 56%, and 61.37 to be exact. We did more OTC stocks than listed stocks. It's almost every time we do this, but I'd say OTC profits have been a lot less. We profited more off of listed stocks this month. So even though we won more in OTC stocks, we profited more off of listed stocks, which means as long as we stay good with cutting our losses, it's okay to lose more than you win. You can easily lose 3 for 7 or win 40% on the week and still profit $4,000. And that's what we did the week that we profited on Apron. We lost more than we won, but we still profited $4,000 plus. And it's possible, guys, as long as you're sticking to cutting your losses. So I think we might venture into listed stocks a little more in this upcoming month, especially with the market bouncing the way it is. But we got to stay strict to cutting our losses if we do jump into the listed stocks. But overall, it was a month to pump the brakes. January was one of those months that we didn't swing as much, which was not a problem at all because we've been highlighting this since December. Since December was a red month, and our first red month in 18 months, because we held in hope on some stocks and we really went for almost anything that was out there, not realizing that the market isn't going crazy and there's not much out there, and we ended up losing. So when there's not much out there, guys, it's important for you guys to realize to pump the brakes. We jotted all these down in December, and I'd say it really, really helped us in the month of January. So if you feel like you're going after too many things, it might just be this slide that helps you out a little bit. And now that we're done with January, I don't just want it to be a brand new year kind of thing. Like, oh, new year, we have new goals. Yes, new year, we have new goals, but we're going to go after those goals. We're going to strike after those goals. So these are the goals I talked about last week. If you guys weren't here last week, I want to accomplish almost every single one. No matter how much I write this down and talk about it, everything starts with you. And that's something you got to realize. I can write down your goals, I can talk about your goals with you, but you got to execute them. Everything starts with you. And that's the beautiful thing about the stock market as well. You have to execute your trades. You got to grow your own account. Everything starts with you. No other handouts out there. Same thing with this. So set your goals and let's go attack them. Let's manifest them. Let's get it, guys.